Hello, everyone. This is Alex,
I'm Joel.
and we are wealth managers from a wealth management firm based out of Toronto, Ontario, Canada. We serve multi-million-dollar corporations as well as families with 6 and 7 figure investment portfolios, Canada-wide, coast to coast.
And this is the Commandments of Wealth podcast, where we're going to be going over some of the insights and strategies that we've learned and implemented with our clients to help them build, protect, and pass on that wealth to the next generation. And today we have a topic that is very relevant. It's not everybody's favorite topic in terms of financial tools, but there's an article here that we want to share with you and go over on how it can help protect and build wealth for people's situation. That topic is
life insurance. I know, right? A very popular topic, I'm sure. So let's flip over here to our topic of the day. This is a great article from the Huffington Post called "Gofundme is Not Life Insurance."
That's an interesting topic.
It very much is. How I came across this topic was, I don't remember who it was that I was talking to or something that I was reading, but someone said, go on GoFundMe and just look up how many people are saying, hey, I had a family member die, or, I have to take care of a relative that I wasn't expecting to. And then basically imagine having to go to strangers and beg them for money.
Ask them for a handout?
Ask them for a handout, right? I personally would never want to be in that situation.
And it's a situation you can avoid, right? And this article talks about it. So I guess let's get into it and see what some of the meat and potatoes are.
Absolutely. So what really gets summarized in this article is 3 points, right? First, the person being interviewed was saying that it's selfish to not have life insurance. We'll talk a little bit about that, whether that is the case or it is not the case. 2, not having life insurance is unfair to the grieving process. So again, we'll talk about that a little bit. And then 3, being without life insurance leaves your legacy out of your control.
So what's the whole base case of this article? What is he trying to argue here?
I think that the base case of the article is really having control versus not having control.
Okay.
Right.
And I guess that goes back to having to go to strangers through a GoFundMe platform at the end of someone's life and ask strangers for money so that they can finalize the estate, and that there's solutions to that is what this article is saying.
Yeah, right.
Let's get into it.
Yeah, let's get into it. So first and foremost, you brought up a great point, and maybe you want to expand on this before, Joel, but most people have a neutral to negative view on life insurance, and if they do, it's typically, from my experience, because they're only thinking of a very specific form of life insurance, which is term,
and it's a common misconception, right? Everybody's needs for life insurance are very different, and it's very different throughout where they currently sit and stand in their life cycle. And the most common insurance, exactly, that people are familiar with this term. You're paying money into a product and it's just a black hole. If you don't turn into an angel in that 20-year time period or 30-year time period, all those premiums that you've been paying annual simply disappear and evaporate after 20, 30 years, and you didn't get any benefit.
Exactly.
That's the one of the reasons why people dislike life insurance, but there's a lot of intricacies and strategies that you can bolt on, especially even to a traditional life term insurance policy that allows you to do some very, very interesting tax strategies. And under that thought process, we want to go over some of the reasons why you want to have life insurance that they touched on to this article, and we'll elaborate on. So I guess the first point was,
is it selfish to not have life insurance?
And what do they mean by that?
So let's walk through this. So according to the article, they're saying by not having life insurance, we are willfully making the choice to make others pay for our own final expenses. Final expenses don't just include funerals, but also the cost of carrying dependents left behind and transferring titles to homes, possessions, and stuff. So that's what the article is saying. So of course there is merit to what he's saying, 100%. But I won't go so far as to say that people are deliberately being selfish by choosing to not have life insurance. But what I will say is that I don't think, and this is just from my experience talking with a lot of clients and educating them, right? When we're talking about estate planning and succession planning, a lot of people aren't aware of just how expensive it is when somebody passes away.
Dealing with the final tax bill.
Dealing with the final tax bill can be extremely expensive, especially if you're
you spend 20, 30 years accumulating
assets, right? And combine this with a period of probably some of the highest emotion that you're likely to be feeling over the course of your life. It's
a loved one passing.
Yeah, a loved one passing. It's not a pleasant experience to have to be dealing with that stuff. And you just think of the pressure that you're adding to somebody where like you pass away and now instead of mourning you, right? But
And do they talk about that in the second point as well?
Yeah, they do. So great transition. So not having life insurance is unfair to the grieving process.
Yeah, because you already have a lot of emotional weight. Usually, if it's a loved one, whether a mom or a dad or a grandfather or brother or sister, they pass away, and if you don't have the plans in place or the executor in place, now all of a sudden you have to deal with that, and it's not an easy process, right? Dealing with the estate, depending on, especially in Canada these days, it's sometimes 3 months, sometimes even longer if you don't have the pieces already in place in that puzzle. Exactly. So I guess you had a story about that, right?
Yeah, I certainly did have a story. So basically, real event. So we had a client at our firm, right? So this is the early 2000s. He was a very successful and accomplished individual. He had amassed, a substantial amount of investment real estate for his family, and the plan of which was to pass that real estate portfolio on to his children, of course, right? So key thing to take away here from that example is that it's the asset being the real estate that he wanted them to have, not the dollar value of said real estate. Okay. So why this is significant is because what happened is that gentleman did have insurance. He just didn't have, an adequate amount relative to the amount of estate taxes that he would owe based on the value of that portfolio. So he passed away, unfortunately, just before 2007's now famous market crash. So what does that mean? Well, when you pass away, when the government's calculating how much estate taxes you owe, they were looking at the basically peak of the market value. But by the time they were settling, you got around time to settle the estate, they had the executives of the estate had their ducks in a row and everything like that. By that time, the market crash, we were well into that. So imagine what his children had to go through when they were now forced to sell a lot of investment properties at substantially less than what they were worth, simply because that specific point in time where the government says we want this amount of money, they had to come up with it.
Yeah.
And they didn't have the liquidity, the amount of insurance that was there just was not enough.
Yeah.
So
the CRA in Canada valued those investment properties at a certain value. The market crash happened. The value of the properties were lower. The clients didn't have enough insurance to cover the value of those properties. Yeah. They were forced to liquidate those properties to create cash to pay the estate tax.
Exactly.
That the CRA valued at a higher number.
Absolutely.
And that was where some of the problems arise in terms of being selfish, not thinking about some of the grieving process, and just having less of an ability to deal with that unfortunate event.
Yeah.
And this is all before they became a client of ours, obviously.
Yes, exactly.
So it's interesting, right? It's one of the reasons why it's so important to have control, even from the grave. And insurance allows you that opportunity to create that ability.
Yes.
But you kind of have to have a little bit of forethought. You kind of have to go through the planning process. And insurance has a rightful place in everybody's life. Like it's interesting you mentioned real estate, because we have another example as well that happened before this family became clients, is that they had a cottage as well as a regular primary residence in northern Canada near Victoria Harbour, Muskoka. And the cottage was part of the family's assets. The kids really wanted to live in that cottage. The Mr. and Mrs. passed away, and they didn't have any insurance in place. And the kids ended up getting in touch with us and saying, well, how do we solve this problem? And unfortunately, because there was no insurance in place, and there was no liquidity available in the estate, the tax
Exactly.
bill on the cost basis of when they bought the cottage and when it was being sold for, the capital gains to the estate was pretty large.
Yeah.
And that ended up kind of forcing the clients, the younger kids, to sell that asset so that they can fund the taxes. And they were a little bit distraught because they weren't able to get the cottage that they wanted to keep.
Yeah.
And a simple insurance policy with the ability to access cash flow, whether it's a loan on that investment, that insurance product, whether it was accessing the cash itself, cash surrender value, or simply the payout, which happened when the Mr. and Mrs. Mom and dad passed away, that would have provided a much better cushion. And
Absolutely. Yeah.
it's, having the opportunity to create financial control should always be valued above no control.
Absolutely. Which brings us to our commandment of the day, summarizing all of that together. Boom. We have that up on the screen here. Commandment of wealth, control over no control.
Yeah, and life insurance structured properly, going through the financial process, allows a family and an individual to have financial control
Yeah.
while they're in the grave. And I know it's not the nicest thing to say, but having that forethought to plan into the future is what insurance can do for you. So it's not all bad.
Exactly. And just to lay out, as well for everyone, there's really three ways that you can settle your estate, right?
Yeah.
So the first way, the least effective way, is you can take $1 out of your pocket to give to the government, right? The second thing that you can do is you can borrow money, right, to pay off the government. However, you're now going to be, short a few interest payments. So that could be, a nice dinner every, month or what have you.
Especially, right? If it's $100,000, $200,000 that you got to tap on your credit line, you got to carry that for 3 months at 3% interest rates.
Yeah.
You're talking about
$100.
a couple $100 every time, $1,000 a year.
Yeah.
And then the third reason?
And then the third, which is the most efficient way, is to use life insurance. Why? Because on average, you're roughly paying 30 cents on the dollar for the amount, because you're basically buying, tomorrow's dollars at today's price. And as we know, with inflation, it's a pretty good deal. It makes a deal. Your
insurance premium can be structured in a way where you get dividend payouts, you get capital appreciation, you get access to cash at better tax rates, right?
Yeah.
All of these reasons are why you want to hold insurance. And the third, like you said, the best way to deal with an estate, it's not pulling out of your cash for liquidity.
Exactly.
It's not dealing with credit costs and interest payments. It's planning and having an insurance component or an estate bond to deal with everything. So that's the Commandments of Wealth podcast. We hope you guys enjoyed it.
Yeah, we will have the links in the description. We will also encourage you to like, comment, and subscribe. If you like the content, want to see more, we'll be back again next week with another great topic.
Smash the like button, subscribe.
Exactly. All right, everyone. Till next time.
Have a good one. Ciao.